Okay, last time we did document splitting. In document splitting, we classified the GL accounts for document splitting. Okay. And of course, T59X. Now, we've already configured this. Now, what is the meaning of uh, document splitting? We've already discussed that, but I will go over the concept yet again. And let's clarify it. This time it will be a high-level explanation. So document splitting is to support segment reporting. Now, segment is basically your business vertical, and segments are superior to profit centers. So, to split vendor plus liabilities like withholding tax and sales tax, okay, between profit centers, we have document splitting. Okay. So for this, we categorize GL accounts, categorize between categories like assets, cash, liabilities, expenses, income, tax, withholding tax, special GL. What else? Balance sheet items and revenue. Revenue we've already mentioned. Okay. So GL accounts are differentiated. So differentiation is one step. Then what happens? Invoice 1, invoice 2, invoice 3, for example, has withholding tax 5.03. This has withholding tax 17.29, and this has withholding tax 23.88. So you can assign from invoice 1 5 to 2 to 3 or maybe more profit centers. Okay, you can assign invoice 2 amount 17 to 2 to 3 profit centers. Okay, but what about the amounts which are from invoice 1, which is 0.03, invoice 2, 0.29, okay, invoice 3, 0.88. What about this? So to settle and clear off this, because this is pending, this cannot be divided, right, between 3 profit centers. What it does, we have a zero balance accounts, which actually distribute the decimal amounts after accumulating into whole numbers. Okay. So once invoice or vendor 1, let's say, vendor 1, it increases from 0.03 to a whole number. For example, that after many invoices, after like 20 invoices, the number, it adds up all the withholding tax like 0.01 plus 0.11 plus and so on plus plus 4.0 and sort of until it actually is rounded up and it goes to 1. So zero balance then doesn't keep any balance in itself, but it distributes to profit centers. Okay, that's the concept of zero balance accounts. Okay, so zero balance clearing account. Its clearing account means clearing accounts basically are interim accounts, okay, that have just one role to clear any amount that is referred to these interim accounts to the respective GL accounts or profit centers, so that at the end of the day or season or the month, the balance of these interims accounts is always zero, because they don't have any financial significance, but they are interim. Interim means they are middleman accounts, so that they can supervise the distribution between two or three accounts. Okay. So standard account for zero balance will be chart of accounts POP-G, and we don't have that new entries 80250. Save. Sorry, I mean, no. Counts. POP-G, not POP-G. Sorry, that will be T59X, not POP-G. Zero balance clearing account. 000 accounts, double click T59X. We've already defined it. Okay. And primary for cost posting 80250 is the same. And for cash pooling accounts, it's also 80250. That's why we have kept the same account. Okay. Next, define splitting methods. Customer vendor tax. We usually use this method. Okay. Vendor tax. Splitting rule. Okay, for splitting rule, we have vendor invoice, item categories to be edited, and we have withholding tax, tax on sales and purchase, that is 0, 1, and 300. Transaction variance V tax, discount clearing. Let's take this one, base item categories. Okay, split automatically taxes. It actually splits the expense to calculate taxes for the profit centers. Okay, and it automatically splits it. Okay. So because taxes, why? Because why split expense, not revenue? Because taxes, input taxes are basically calculated based on the expense. What is the expense? That anything that we are procuring, buying from the vendor. So the expense will decide what will be the tax amount. Okay. That is how it is done, and based on the vendor invoice. And withholding tax, based item categories will be what base item will be affected to calculate and split withholding tax. So that will be the balance sheet account. That will be your withholding tax is also your liability, and it's a payable. Okay. And the balance sheet account will be the withholding tax liability. Okay. To split that. between profit centers. Okay, assign document splitting method, inheritance standard account assignment. Document splitting method that we have already seen 0, 1, and I can't actually recall what is inheritance. I had that in my mind, but I've forgotten that. But anyways, define business transaction variance. What business transactions will be affected? Vendor invoice 0300, standard 01, assigned item categories. Okay, vendor, of course, a vendor invoice, vendor will be required. Okay, and for that to apply 0300 transaction on vendor invoice to cause the splitting and affect and activate the splitting. I hope you got the point. Subsequent implementation. So once you are actually into document splitting, we'll see that. We'll come back to this one. Okay. When we actually assign transactions, and then of course we can, but let's activate that first. Deactivation per company code. No, we don't want to deactivate it. T59X. It's not inactive. Okay. So this is the process of document splitting. You have to actually understand the process of document splitting. Even if it doesn't make any logic right here, but it will actually be seen in the transaction. Simulate document splitting once. Simulate general document splitting for general entries. Company code T59X 2023. And all documents. We haven't generated any documents, but let's see what it says. No documents because we haven't entered. So this transaction will be run later. Okay, but you can actually tell in interviews that yes, this is the splitting process. So we'll come back to this later on. Okay. Execution phase, implement document splitting. Let's see that. Okay, we'll have to find a project, but right now, let's keep it for the next time. Okay. So that was document splitting. Now let's come back to the next part, that is controlling. General controlling. Now we have to assign profit centers. Okay. Organization maintain controlling area. P59X builds bulls and bears trading, selected activate components. Okay, component is active, assignment of company codes. Okay, we have already done this. Fine, that is good. Now we can go and check. Now, what is this basically controlling area setting that I just did? Okay, nothing is controlling area. Controlling area has one too many company codes based on chart of accounts and fiscal year variant. Okay, because if this is the same If it is shared by controlling area with all the company codes, then these company codes can report to this controlling area. That is fundamental. Okay. So now, why it is fundamental? It will be clear. Now let's go to profit center accounting. Basic settings, set controlling area. T59X. Okay, controlling area settings. Maintain controlling area settings. We've already done this, and we have controlling area currency as a profit center currency type. Okay, we've already done that, which is good. Now the next step is dummy profit center. Analyze settings, activate direct postings. Okay. Now, before going for next step, general controlling organization versions. Versions. Version 0. Controlling area setting. Position. T50 version 0. Version 0. Settings for each fiscal year. Okay, it is already done. Define ledger for CO version. Let's also check this before we actually go ahead. T59X. T59X. Okay, it's already done. Fine. Master data, profit center, dummy profit center. Create dummy profit center. Why do we need dummy profit centers? I'll tell you that. Double click. Dummy T59X, enter basic data. Dummy T59X, dummy T59X, profit center group. Okay, T59X, no segments. Save. Press enter, it will go away. This orange warning goes away. Okay, this is done. Profit center. I hope this is overloaded now for you guys.